Now, if past were prologue, the price of copper should offer some clues about the appetite of industrial consumers. The price of copper, it's down nearly 10% in the past 5 trading sessions, leading banks today to cut their copper price forecasts. Now, to help us understand and perhaps prosper from the changes in copper's allure, let's turn to Stephen Leeb of The Complete Investor. Stephen, a pleasure. Thanks so much for coming in.
Thanks,
All right, copper as a proxy for global industrial demand. Is there really a connection?
Well, I think there's some connection, Pimm, but it's not one-to-one. I mean, for example, in 2006, 2005, 2006, copper went down 40%, more than it's gone down to date from its high. And the economies of the world were sailing along. I mean, even the developed world, believe it or not. There was a time when the U.S. and Euro region actually grew, and they were growing during that period. Commodities tend to be spectacularly volatile, and you're seeing some of that right now in the copper patch. What I would also look at, and it's probably a much more important commodity than copper, is oil. And yes, that's come down too, but Brent crude, which is really the key benchmark in the world, is still over $100. I mean, it's really hard to say that the world is diving into, some sort of catastrophe when you see Brent trading at over $100 and copper at $3.10 or $3 or $2.90. Again, that's not out of whack with what we've seen in the past and which is not indicated a recession. I mean, I'm not saying recession couldn't come, but I'm just saying copper would be just one clue.
Now, is the reason for this perhaps disjointed move in copper versus economic growth that copper producers, copper miners take a while to bring their mines on stream in order to meet that demand? Then the demand hits the market, the price goes down, and it takes a while to soak up that additional demand. Because we know that mining operations, these are capital-intensive projects.
Oh, they're so capital-intensive. You're so right. And what's happened in copper and why it's really tough to get too bearish, I mean, you really have to believe that China and the rest of the emerging economies are going to throttle down in a major way.
China accounts for something like almost 40% of global copper demand.
Right, and China's consumption of copper has actually started to rise after falling a little bit. Now it's rising fairly, at a decent rate. But even China is affected by the fact that the developed world, the Eurozone, $20 trillion in GDP, the U.S., I think about $14 trillion, together about half the world is not growing right now. It really is not consuming a whole lot of copper. What I think you should be worried about is not so much that copper is falling, but what happens. Warren Buffett today, I think, bought a housing stock, something in the housing industry. He'll probably be right. He usually is. And if housing starts picking up in the United States, where is the copper going to come from? I mean, what we're seeing worldwide right now is that copper grades in these mines that people have spent tens of billions of dollars for is going down. Copper is becoming a scarcer commodity.
So the quality of the copper that's coming out of the ground going to market, that's lower now.
Well, the quality of the copper per se is the same, but the quality of the ore you're getting out of the ground is much lower. It takes a lot more time and a lot more to refine it. You're not getting nearly as much copper per ton of ore as you were, let's say, 5 or 10 years ago. I really think the problem, I'm not talking about next month or even 2 or 3 months from now, is a dramatic, and I use the word advisedly, dramatic scarcity of copper. It just isn't there.
So how do you make some money in this? I mean, do you go out and buy a copper mining company like Freeport-McMoRan Copper and Gold? What do you do?
I would buy Freeport, and I would tell anybody that does buy it, there's a caveat. Copper could fall further. China may have an unexpected important slowdown, but long-term, Freeport could easily be a $100 stock. But you have to be willing to suffer through the volatility.
You have to have some patience, too.
Patience and a strong stomach. Now, if you're the kind of person that says, look, I have the Mercedes or the Rolls-Royce of the copper patch, I know copper is scarce, it's only a matter of time, I'm not going to look at the price of Freeport every day, it's a great stock for you. You're going to make a lot of money with it.
All right, so Freeport-McMoRan Copper and Gold, FCX. What about companies like Rio Tinto and BHP Billiton? They're much larger in terms of the kinds of metals that they bring to market.
They are. And BHP is much more an iron ore company than a copper company. Copper's there, and I think if you want copper, it's too small a play. Rio is interesting because they have a stake now in a huge copper mine in Mongolia called Ivanhoe. And I think you're kind of getting Ivanhoe, a big chunk of Ivanhoe, with a lot of other good assets as well that Rio has. So yeah, I would say Rio's a decent stock to hold. BHP, I don't like some of the acquisitions they've made. I think that this recent acquisition in the U.S. and the shale gas, I don't think it was well thought out, but who am I to say? I'd much rather own Freeport first, then Rio. And, I wouldn't quarrel with anybody if I saw BHP in their portfolio. I wouldn't say you're out of your mind. But I think that, again, Freeport and Rio would be two great choices.
Always a pleasure. Stephen Leeb joining us from The Complete Investor.